Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. In trade yesterday, post a gap up opening, consolidation was witnessed for a major part of the day. Nifty witnessed a slight minor profit booking during the tail end of the session, managing to end the day 0.5% higher. The market breadth for the index ended on a mixed note with an equal number of advances and declining stocks. Among the sectorial indices, Nifty Realty and Nifty Consumer Durables were the top gainers, while Nifty PSU Bank and Nifty IT were the top losers. Notably, Nifty Mid-Cap and Nifty Small-Cap indices gave fourth and fifth consecutive positive closing, respectively. Interestingly, the Small-Cap index closed the day above its 20-day EMA, its first such feat since 4th March. Coming to the macro factors, the US dollar index is trading at elevated levels of 104.31, and the US 10-year bond yields have witnessed a slight minor cool off towards 4.23%. Meanwhile, Brent crude oil has stabilized at $85 a barrel, and the immediate short-term swing high of 87.67 is the immediate hurdle for the index. The trend of crude oil prices coupled with the movement of USD INR would be extremely crucial from an Indian standpoint. Coming to the key levels for Nifty in trade today, the zone of 22,180, 22,200 will be the immediate hurdle for the index. Any sustainable move above the levels of 22,200 will lead to a short covering move in Nifty towards 22,270, 22,320 mark. While on the downside, the 20-day EMA zone, that is the levels of 22,050, 22,080 will act as the crucial support for the index. In case the index slips below 22,050, it could lead to further selling pressure in the index up to the levels of 21,900 on the downside. Coming to the OI data for Nifty, so Nifty the monthly series PCR is currently at 1.13. If you see, call writing is witnessed across 22,200 and 22,300 strikes, while on the put side it is majorly seen in 22,100 and 22,000 strike. So the overall range for trade could be 22,050 on the downside and 22,260 on the upside. Coming to Bank Nifty, the zone of 46,950, 47,000 will act as the crucial resistance for the index. Any sustainable move above the levels of 47,000 will lead to a short covering rally in Bank Nifty up to 47,200, 47,300 mark in trade. While on the downside, the 50-day EMA zone, that is the levels of 46,600, 46,630 will act as the crucial support for the index. In case the index slips below 46,600, it will lead to selling pressure towards 46,250 on the downside. Coming to the OI data for Bank Nifty, so Bank Nifty PCR for the next weekly series is currently at 0.96. Significant call writing was seen at 46,800, 47,000 strikes, and on the put side it was majorly seen in 46,500 strike, implying a range of 46,610 on the downside and 47,000 on the upside. Coming to stocks and sectors in momentum, so in trade yesterday, the likes of Reliance, Bajaj Auto, Maruti, Titan, Larsen & Toubro, Sun Pharma, Prestige, Max Health, Indian Hotel, Dixon, Torrent Power, CG Power, they all performed good and look currently positive on the charts. Even the relative strength chart is relatively outperforming in comparison to the market. Coming to the FII DI data, in the cash market segment, both FIIs and DIs were net buyers yesterday. This to the tune of 2,170 crores and 1,197 crores respectively. FI long short ratio for index futures is currently at 31.34 on a net basis. This as they sold about 15,392 index futures. On the stock futures front, FIs have sold to the tune of 29,781 contracts, while on the options front, FIs bought 76,857 call contracts and they purchased 1,30,112 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.